Why medical bills bankrupt Americans? Even with insurance, most Americans who go bankrupt from medical bills had health insurance. Let that sink in. They followed the rules, they paid their premiums, and they still lost everything. So how does that happen in the richest country on earth? The shocking reality. In the United States, medical debt is one of the leading causes of personal bankruptcy, and this is not limited to the poor. Teachers, small business owners, middle-class families, retirees. According to multiple studies, more than half of Americans with serious medical debt were insured at the time they got sick. This is not a failure of responsibility, it is a failure of the system. Insurance does not mean protection. Most people believe insurance works like a shield. You get sick, insurance pays. But in America, insurance works more like a filter. Before insurance pays anything, patients must first meet a deductible, often thousands of dollars per year. After that, many plans still require co-pays and co-insurance, meaning patients continue paying a percentage of every bill. So even with insurance, a single hospital stay can still cost tens of thousands of dollars out of pocket. And this is only the beginning. The out-of-network trap. One of the most devastating surprises in U.S. healthcare is the out-of-network bill. A patient may go to an in-network hospital, but the anesthesiologist, radiologist, or lab technician might not be in network. The patient does not choose them. The hospital does, yet the bill still goes to the patient. This is how someone can receive a five-figure bill for care they never agreed to and could not refuse. For years, this practice financially destroyed families overnight. Claim denials and delays. Even when treatment is covered, insurance companies can still refuse to pay. Claims are often denied for reasons like not medically necessary, incorrect billing code, lack of prior authorization. Appealing these decisions requires time, paperwork, and legal knowledge. Many patients simply give up. Hospitals, however, do not. The bills keep coming. Interest accumulates. Credit scores collapse. Why this doesn't happen elsewhere? In most developed countries, healthcare pricing is standardized. In the United States, it is not. The same procedure can cost $500 at one hospital, $5,000 at another. There is no universal price list. Patients rarely know costs before treatment. And because insurance negotiates behind closed doors, no one pays the same price, except uninsured patients who often pay the most. Who benefits and who pays this system benefits? Large hospital networks, insurance corporations, pharmaceutical companies, administrative middlemen. It harms patients, workers, small businesses, retirees on fixed income. Medical debt is now one of the fastest paths into long-term poverty in America. Not because people were reckless, but because they got sick. Conclusion. The U.S. healthcare system was not designed to bankrupt people, but over decades it evolved into one that often does. Understanding how it works is the first step toward understanding why change is so difficult and so necessary. If you want clear, documentary-style explanations of how American systems really work, subscribe to America in Context, because understanding the system is the first step to surviving it.